Arun, I am not able to hear you. Are others able to hear Arun's voice?
No, I think Arun was having a network issue. He was
Sir, it is disconnected, sir.
Yeah.
Huh? Disconnected?
No, sir.
Sweet, we'll wait for 2 minutes, and if Arun is not there, I will proceed for further.
Okay. Just a minute, we'll wait. 6:10, then we'll start.
Sorry, sir. Good evening, members. Welcome to today's VCM on assessments under Section 148 of the Income Tax Act. I welcome our Nellore branch chairman, CA Sujit Kumar Jain, treasurer, CA I. Vamsi Krishna sir, to this webinar. I also welcome today's faculty, CA GVN Hari sir, to this VCM. Before starting the VCM, I request all the members to stand for the ICI motor song.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं पुरुषो निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता
Thank you all. Now I request our Nellore branch chairman, CA Sujit Kumar Jain, to give his opening remarks.
Good evening, members. I welcome all of you for today's seminar on assessments under Section 148. First of all, I would like to thank CA GVN Hari sir for accepting our invitation to deliver this topic to Nellore members. I also would like to thank CA Chalpat sir for introducing sir to us. So first, I had the pleasure of listening to sir at the sub-regional conference of SARC at Visakhapatnam a few years back, maybe 4 to 5 years back. So the incident was one of the speakers from Bangalore. He could not attend the conference at the last minute, and I think sir handled the session spontaneously at that moment on the request of the managing committee members of ISAC. And in one of my appeals with the Commissioner Central Circle last year, so the inspector there helped us, referred one of the cases of sir and said it was relating to assessment year 2008-9, and it was a 153A assessment, and it was told that the notice could not be issued for assessment year 8-9. That time period of 10 years was elapsing. So like that, I again got the help of sir. And recently one more case law is regarding this section 153C notice was supposed to be issued, but the assessment was done under section 148, and that IT-80 tribunal decision I saw of sir. It was Samantavadi Lavanya, one case law. So a lot of huge additions were struck based on a simple technical point, and that excited me. And so I tried to get the contact of sir, and I requested him so that all the members of Nellore branch can also benefit from his expertise. Thank you once again, sir. So 148 is a very important topic. As we all know, that the department now has the time limit has been curtailed to 3 years from the past 4 and 6 years. But these kind of assessments, maybe especially for young members, they should know the procedure of what happens when you get a 148 notice, how you have to respond, how can you challenge it on technical basis, then on merits. So these are the things we will learn from sir today, and I hope all of us will enrich ourselves from what we were before regarding these sections and the assessments. And as always, it enables us to serve our clients better and be more confident in our practice, which will help us to fight off all the competition from the online portals. Because I saw a message in our WhatsApp group of Nellore that clear tags and all Vakil search. So they are having a good revenue. The only way we can survive all this competition is by updating ourselves and being competitive enough with our services. That is the only way. We cannot fight on cost. Only way is by quality we can fight it out. And because these kind of assessments, this search and survey assessments or reassessments, the tax liability runs into crores. So with this, I would like to conclude my thoughts for today. Thank you very much. I hope you have a great session today. Thank you.
Thank you, sir. Now I request CA Vamsi Krishna sir to introduce the faculty to our members.
Thank you, Arun. It is a great pleasure for me to introduce such a renowned faculty, GVN Harigaru, to our audience. He was born in the year 1967 at Guntur. He was born to Mr. Panduranga Vittal Garu and Uma Devi. He was married to G. Purnima Garu, and he has a daughter who had completed her MBBS. Her name is Ms. Divya. GVN Hari is an advocate practicing in the specialized area of tax litigations. He secured first rank in state humanities in board of intermediate exams and qualified as a chartered accountant in the year 1987 at a very young age of 20 years. He qualified as a cost accountant in the year 1994. He carried on the profession of chartered accountancy from 1988 to 2012. Later, he enrolled as an advocate in October 2012, and since then practicing as an advocate, concentrating on appeals under Income Tax Act. He is having experience of more than 20 years in representing tax appeals before various authorities. Since his enrollment as an advocate, he has been representing the tax matters even before the High Court. He is a retainer for various public sector undertakings like RINL Visakhapatnam, HSL Visakhapatnam, DCI Visakhapatnam, and BPT Visakhapatnam. Apart from the above professional activities, he has presented papers on matters relating to audit and taxation at various seminars organized across the state of Andhra Pradesh. With this small introduction, I welcome our today's faculty, GVN Harigaru. Thank you, sir. And I thank the Nellore bench for giving me this opportunity.
Thank you, sir. Now I request CA GVN Hari sir to continue with the session.
I want to share the screen.
Shravan, make sir host.
Yes, sir, done.
So now you can share the screen, sir.
Yes. Are you able to see the
Yes, sir.
PowerPoint?
I'm able to see the screen, sir.
Chairman of Nellore branch, CA Sujit Jain, CA Vamsi Krishna, Arun Kumar, other members of the branch. It's indeed a great pleasure for me whenever I get an invitation to share my knowledge with my professional colleagues, be it Visakhapatnam branch or any other branch. In fact, I was very active in speaking at seminars a few years back, but of late, due to my professional preoccupation, I am very choosy in accepting the invitations. But Sujit Jain, his request I could not deny because whatever he told you, he told me also. So I thought when somebody is so eager to hear to you, so I should not deny such request. So that's why I accepted. I will try to justify to the best of my ability. Now, before we go into the topic proper, that is assessments under section 148 or 147, whatever it is, under the amended provisions, we need to know a few things about such assessments, because one of the important reason for making amendment to these provisions is also because the existing provisions relating to searches led to a lot of litigation, and in fact, most of the assessments were quashed as such on technical issues. So therefore, the government thought it is better to shift from the erstwhile scheme to, in fact, a scheme that existed prior to 1795. Up to 30th June 1995, there were no special provisions to deal with search assessments. The regular provisions dealing with reopening of assessment, the same provisions were applicable even for dealing with search cases. Later on, they experimented with a concept called block assessment. Initially, the block was a period of 10 years. Thereafter, it was reduced to 6 years. But the entire block was to be treated as one single year. And for all the block together, there will be only one single assessment. But again, there was a lot of litigation as to whether an assessment in a particular issue has to be brought to tax in a block assessment or a regular assessment. At that point of time, according to me, the government should have gone back to the original provisions relating to reassessment, even for such cases. But they thought it wiser to devise a via media approach. So they have brought into the statute section 153A, 153C, and all these provisions. But after almost 16 years, they realize that even these provisions are not working properly for them. So therefore, again, they thought they should go back to the original set of provisions, that is the provisions relating to reassessment. Though the text of the provisions is now drastically amended, but conceptually, they have gone back to the same position that existed prior to 17/1995, that there will be no separate provisions relating to such cases. All cases of even search and seizure will be dealt with in the normal manner like any other case of reassessment. Now, when it comes to search cases that were dealt with under section 153A and 153C, there are two sections that are relevant, those are section 132 and 132A. 132 is a section whereby on the basis of a warrant, the residential premises or business premises or such other premises where some incriminating material or undisclosed asset is likely to be suspected to be found, those places are searched, and on the basis of the evidence that is found and seized, the assessments are taken up under section 153A. Now, 132A is the asset or the books or other documents are not directly recovered from the SSE. They are already existing with some other government authority, some investigating authority. And on the basis of a requisition, the income tax authorities get these books or assets from the other government authority. And on that basis, they proceed to make assessment under 153A. Now, while proceeding with an assessment under section 153A, if they come to know, or if they come to reach a satisfaction that the asset does not belong to, or the books of account or other documents does not belong to the person actually searched, but they belong to a third person, then the third person's case is what is to be dealt with as per section 153C. So this is the brief background of provisions relating to search and seizure, that is 132, 132A, 153A and 153C. Because these four sections are frequently referred to in the amended provisions relating to reassessment. That is why it is imperative that we should have knowledge of these four sections to understand properly the text of the provisions relating to reassessment. Now, with this brief introduction, let us now come to our present topic, assessments under section 148. Now, the objective for changing these provisions, in fact, the provisions relating to reassessment, that is 147, 148, 149, 150, up to 152. 153 is a general provision relating to time limit for assessments. These provisions, with a very few amendments now and then, they have been there in the statute book right from 1961, and in almost same form, they existed even in the 1922 Act. Now, after such a long-standing history of these provisions, why there was a need to change the content of these provisions? It is one thing that the government decided to not to have a separate code of assessment for such cases, but it is completely another thing to make amendments to the provisions relating to reassessment. So the objective is not a single objective. There are multiple objectives behind the amendment of these provisions. So this, we try to get a gaze of what was going through the mind of the government when they have amended these provisions. If we have a close look at the speech of the finance minister and also the memorandum that explains the provisions relating to the Finance Bill 2021. The first one is the finance minister's speech. In this, it is mentioned that, Honorable Speaker, presently an assessment can be reopened up to 6 years and in serious tax fraud cases for up to 10 years. As a result, taxpayers have to remain under uncertainty for a long time. I therefore propose to reduce this time limit for reopening assessment to 3 years from the present 6 years. So what the finance minister says is, the basic objective is to put an end to uncertainty. One need not wait for 6 long years to know whether his assessment is concluded or not, because up to 6 years an assessment can be reopened. Now they wanted to bring this limit down to 3 years. Then if this is the only amendment they wanted to make, only section 149 was the section that was required to be amended. There was no need to amend all other sections which form the code relating to reassessments. So therefore, to have a further idea about what was the memorandum explaining the provisions of the finance bill. First, it is only with regard to the existing provisions. Now, this is where the reference comes to section 132, section 132A, section 153A, 153B, C, D, etc., etc. These are the provisions that were introduced by the Finance Act 2003. to replace block assessment. So I have already explained you that before 30th 17/1995, that is up to 30th 6/1995, even block assessment was not there. From 1st July 1995, there was block assessment. From 1/6/2003 onwards, this present scheme of assessment of such cases is there, and they were all now done away with. The reason is the experience with this procedure has been no different. So the block assessment concept failed. That is why they experimented with 153 and 153B. But even the experience with this procedure has also been no different. Like the provisions for block assessment, these provisions have also resulted in a number of litigation. Litigation is not their main concern. Their main concern is the provisions failed, to put it the other way. The provisions failed to get them in. They are basically interested in getting the revenues. On technical issues, most of their assessment were getting quashed. So that means the provisions have failed. Now, merely because the provisions have failed, then that cannot be a reason to come back to section 148. The reason is now they are very confident that they are capturing the data from various sources on the basis of Aadhaar linked PAN number, and on the basis of this data, they can easily identify the cases of underassessment or income escaping assessment, and they can close on to that case in a very short time. Earlier, if there was an income escaping assessment, there was no specific way or method for the departmental officer to know that this income is escaping assessment. Only when some search takes place or a survey takes place, or accidentally in the case of search of one person, the information of the other person comes to light, or some complaint is given by income evasion petitions, evasion of tax petitions. So these petitions, when they are sent by one person against the other person, these are the only sources on the basis of which the department was coming to know that there was some escapement of income. But now they are very confident that on the basis of the annual information statement that is to be uploaded by various institutions in respect of the specified transactions, the government is very confident that they can easily get to know whether a particular person is reporting his income properly or not, and whether in a given case, whether there is underassessment or not. So this is also one of the reasons why they are able to confidently reduce the time limit from 6 years to 3 years. What does the department do? Department uses this information to verify the information declared by a taxpayer in the return and to detect non-filers or those who have not disclosed the correct amount of total income. Therefore, assessment or recomputation of income escaping assessment to a large extent is information driven. This is the most important point that we have to gather from the changes that are happening in the department. Now, unfortunately, our taxpayer assessees are still ignorant about the advancement of technology, the various sources from which the department is getting information, and they try to hide the information from the tax consultant when the return is being prepared. Now, fortunately, the department has decided to disclose all that data they are capturing from various sources in the form of 26 AS, and also a separate statement will be displayed in the web portal in the case of each person, where from you will be able to know what are all the data that the government has gathered in respect of a particular financial year, in respect of any particular taxpayer. Now, so it is incumbent upon each and every tax consultant now that they should explain to the SSE on the basis of this data available in the web portal that see, these are all the transactions you have carried out during this particular year. Don't think that department does not know about these transactions. They already have knowledge of these transactions. In fact, all these transactions are reflected or disclosed in their web portal. So therefore, you don't think that department will not get to know about this information. So on the basis of all this information, let us try to compute your correct income so that you will be saved from uncertainty and also harassment in the form of assessments, reassessment, penalties, prosecution, etc., etc. So this is one important aspect that we as a consultants also should take note of. So now with all these changes that are happening, now the provisions are to be amended, and finally the aim is summarized as the bill proposes a completely new procedure of assessment of such cases. It is expected that the new system would result in less litigation and would provide ease of doing business to taxpayers, as there is a reduction in time limit by which a notice for assessment or reassessment or recomputation can be issued. Now, whether all these objects are achieved by virtue of these amendments that are proposed to be made, that is an analysis that we can do now in the next 1 hour. Now coming to the provisions proper, there is a chargeable section, that is section 147, which grants power to the assessing officer to deal with income escaping assessment. Now the conditions are that there should be some income chargeable to tax that has escaped assessment. If these two conditions are satisfied, then the assessing officer can, subject to the various procedural provisions that are laid out in 148 to 153, he can assess or reassess the income. An explanation is now inserted here, which says the assessing officer may assess or reassess the income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of the proceedings under this section, irrespective of the fact that the provisions of section 148A have not been completed. Now, as of now, we have not seen what is 148A, but still we can try to understand it in a simple terms in this manner, that certain procedures are to be complied with by the assessing officer, already mentioned in section 147, because 147 is subject to 148 to 153. Now, some of the procedures need not be complied with. When it comes to a case where assessing officer has already followed the due procedure and he has already reopened the assessment, and while going through the reassessment, he comes across some more issues in respect of which also the income has escaped assessment. Now, to deal with these particular issues, it is not necessary for him to go back to square one and to start the procedure once again. He can continue the proceedings, and in the very same proceedings, he can deal with those issues also which have come to his knowledge subsequently. This is how we can understand this explanation. Now, this particular issue has been subject matter of serious controversy, and various decisions have come up. There were divergent views expressed by various high courts. Now the matter, according to me, has come to rest. Now it can no more be argued that the procedural part has to be complied with for the purpose of dealing with additional issues. Apart from that, the main issue is, suppose the assessing officer reopens the assessment to make addition in respect of some cash deposits in a bank account. Now, once he has reopened that issue, he finds that during that particular year, SSC sold one property there is capital gains arising on the sale of that property. This capital gain income was not disclosed in the return of income. But because of the sale of property, there was a source available to him, and the deposits in the bank account stood explained. Now, the interesting situation that arises here is, though he has reopened the assessment for the purpose of assessing to tax the deposits in the bank account, now they are no more unexplained because there is a sale of property and the proceeds of sale of property is what was deposited in the bank account. Now, can he deal with the issue of capital gains or not? So that means it is a case where the original issue for which the reassessment was initiated, no addition is being made in respect of that. But there is another issue in respect of which he has to make an assessment. He has to make an addition, whether he can make that addition or not. Now, if we read carefully this particular explanation, it is very clear that assessing officer may assess or reassess
రావణ్, మీకు ఆడియో వినపడుతుందా?
సార్ లేదు లేదు స్ట్రక్ అయినట్టుంది సార్.
సరే అండి, ఒక్క నిమిషం.
Hari sir, are you available?
సుజిత్ సార్, ఈ నెట్వర్క్ కనెక్షన్ ప్రాబ్లం ఉన్నట్టుంది, ఒక్కసారి కాల్ చేయాలి సార్.
Yes. Yes, sir.
my screen also visible, or shall I have to share the screen?
Share the screen again, sir. Not visible now. Again, Shravan, I think again, if you have to make sir co-host, please do that. Yes, sir. Screen is visible, sir.
Okay.
Sir, the previous slide, we have to be in the previous slide.
It got cut, sir. Logged off. Yes.
My example, could you hear that example?
No,
Yes,
sir.
sir. Your example was that when examining bank deposits, if the issue
Yes.
of capital gains comes, how
Yes.
the assessing officer can deal with it. So you have
Yes,
to give
yes.
the explanation now. Yes, sir.
Yes. So now the previous provisions, what they say, at least one of you better be on the screen so that I can see your reaction, and at least one, that is sufficient. This provision says assessing officer has reason to believe that any income chargeable to tax has escaped assessment for any assessment year. He may assess or reassess such income and also any other income. This was the old provision. And also any other income. So this and also, two conjunctions were used by the statute. So interpreting these two conjunctions, it was held by some of the courts that only if the first edition is there, the issue in respect of which the reassessment is proposed, only when that addition is made, any other income chargeable to tax also can be dealt with. This was the old provision. But now the new provision, the explanation simply says, for the purpose of assessment or reassessment under this section, the assessing officer may assess or reassess the income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently. It nowhere uses the old wording, assess the income and also any other income. That confusion is no more available. So according to me, that old controversy is no more exists in the present amended provisions. Now assessing officer can very well deal with any new issue that crops up, irrespective of the fact whether he is making any addition in respect of the original issue for which the assessment is initiated, or whether he is making that addition or not. Irrespective of that fact, he can deal with any other issue. Now there is in between for a very short while, that is,
Excuse me, sir.
from between 90.
Sir, can you maximize the screen? Because
If I maximize, I won't be able to see you people, but still I will try. Is it okay now?
yes, sir.
These provisions existed in the Act for a very short period.
Sir, before you proceed forward, just wanted to clarify, which means
Yes.
the assessing officer is now can add any issue which comes to his notice.
Yes,
Can
yes.
make assessment for such issue. So everything
Yes,
is
yes.
open now. So no limited scrutiny, nothing to the issue which is open.
Yes. No, particularly reassessment does not revolve around limited scrutiny. Reassessment is for a reason. For a reason, assessment is reopened. It is not like your regular scrutiny. So when assessment is reopened for a particular reason, the assessing officer need not confine himself to that particular reason. If he comes across some other areas of escapement of income, he can very well handle those issues also. And he need not
So totally wide variety
follow
of
the entire
power is
procedure again.
extended.
Yes, yes, in a way.
So-
Earlier also this power was there because Section 147 earlier also empowered him to make any other issue also into consideration, to make addition in respect of any other issue also. The only difference then and now is the interpretation by some of the courts is that if you are opening the assessment for a particular reason, you have to make addition in respect of that. For any reason, it so happens that if you are not making addition for that particular issue, you cannot make any other addition. If you are making addition for the original issue, you can make addition for the other issues also. This was what was the old provision. Now, even that controversy is addressed now in the amended provisions. It is not necessary that he should also make addition in respect of the original addition. Irrespective of the fact whether he is making addition in respect of the original issue or not, he can tackle or deal with the other issues in respect of which there is escapement of income, which have come to his notice subsequently during the course of reassessment proceedings. So this is one important aspect with regard to that particular explanation. The purpose of the explanation is that. Otherwise, Section 147 is sufficient. Why the explanation is also existing is because of that. Now, this is a provision that existed in the Act for a very short while. So what it says is, AO for reasons to be recorded by him in writing is of the opinion that any income chargeable to tax has escaped assessment. Now, this opinion is a very wider word, like a word having wider scope when compared to AO having reason to believe. So therefore, the provisions have been assailed and the government also conceded, and therefore the present provisions have come into picture, which say that assessing officer has reason to believe that any income chargeable to tax has escaped assessment. Now, if you see this Section 147 now as it exists, if any income chargeable to tax in the case of an assessee has escaped assessment for any assessment year, the assessing officer may, it continues like that. In fact, here also you have both the provisions side by side. Now, if the assessing officer has reason to believe that any income chargeable to tax has escaped assessment is the present provision. The new provision is, if any income chargeable to tax in the case of an assessee has escaped assessment, the AO may subject to the provision. So the word reason to believe, as reason to believe, this is a very important phrase that is now removed. Now, there are apprehensions among the professional circles that this removal of the phrase has reason to believe might have caused some damage to the assessees. Now, assessing officer need not form any belief that income has escaped assessment, and automatically he can reopen any case up to 3 years without any limit, without any restrictions or without any fetters on his powers regarding reopening an assessment. But it is exactly not so. That we shall know now when we go to section. So this is what I have tried to explain. These are the two major changes now in section 147 wording. Concept of reason to believe is omitted now from the section. And now assessing officer originally may not make any addition. Assessing officer now may not make any addition in respect of original issue for which reopening is made, but still he can make additions in respect of any other issue which comes to his notice subsequently. That means this Jet Airways decision, which was very popular decision under the previous provisions, is no more of any help to the SSCs now. Now, let us come to section 148. Now, what section 148 says is, before making the assessment, reassessment or recomputation and subject to the provisions of section 148A, the assessing officer shall, that is the most important word, shall serve, both are very important words. Assessing officer shall serve on the SSC a notice along with a copy of the order passed under section 148A. So still we have not seen what is 148A. We will see a very short while, but there will be an order under 148A in certain circumstances, and wherever such order is passed, that order also is to be provided to the SSC along with notice under section 148. And service of notice under section 148 is must and mandatory. Without service of notice, assessment under section 147 cannot be made in respect of an SSC. Otherwise, these provisions are more or less the same provisions as they existed prior to the amendment, except that because now 148A is brought into the statute and it provides for passing of a specific order under section 148A before issue of notice under 148. Therefore, it is made mandatory in section 148 that the copy of such order also shall be provided to the SSC along with the notice under section 148. Now, the most important amendment made to section 148 is in the form of a proviso. A proviso is always an exception to the main provision. Section 148 gives a power to the assessing officer to issue a notice to reopen the assessment. Now, this power comes to him with an exception. That exception is what is provided here, saying no notice shall be issued. So as I have mentioned you, proviso is always an exception. 148 says notice shall be issued. Proviso says no notice shall be issued. When? Unless there is information with the assessing officer which suggests that income chargeable to tax has escaped assessment in the case of an SSC for the relevant assessment year, and assessing officer has obtained prior approval of the specified authority to issue such notice. So, two important conditions. One is very easy to understand, that whenever assessing officer proposes to issue a notice under section 148, he is duty bound to get an approval from the specified authority. Who is a specified authority? We will come to know shortly in the subsequent provisions. Now, without taking this approval, assessing officer cannot issue a notice under section 148. Then, even for that purpose also, there should be information with the assessing officer which suggests that income chargeable to tax has escaped assessment. Now, if you recollect section 147, only if there is income chargeable to tax that has escaped assessment, then only assessing officer can assess or reassess that particular income subject to 148 to 153. So therefore, this income chargeable to tax escaping assessment is the lifeline of the entire reassessment provisions. Now, there should be some information with the assessing officer which suggests, at least, it should be at least suggestive, if not conclusive, there may be some evidence with the assessing officer which conclusively shows that there is an escapement of income. But that conclusive evidence is not necessary at the time of issue of notice under 148. It is sufficient, at least if he has an information which suggests that income chargeable to tax has escaped assessment. So only when there is such information with the assessing officer, by taking a prior approval of the specified authority, the assessing officer is empowered to issue notice under section 148. Now, reason to believe whether that purpose is to some extent fulfilled or not. If we see the proviso, to me it appears, yes, more or less that reason to believe concept has come in here. Now, in fact, it is a better situation for the SSC because earlier in the garb of reason to believe, the assessing officer was trying to reopen the cases even on account of a change of opinion. Without having any external information also, the assessing officer was trying to reopen the assessments which were already concluded, just because he entertains a different opinion from his predecessor. Now that situation is no more possible. There should be information. Without showing that there is some information, the assessing officer cannot reopen the assessment. Now, there is another important amendment that has been brought in. For the purposes of this section, under section 148A, the information
Sir,
which
before we move further, one doubt, sir.
Yes.
Sir, does it mean, earlier they used to simply the CIB report or any other information report received from the investigation wing, assessing officer used to, based on that information, used to go for 148 without forming reason to believe, no independent application of mind. So all that cases which were beneficial for the SSC will no longer be beneficial under the new regime. Does it mean that only simply information is available? There is no reason on independent application of mind and reason to believe are no longer required. Does it mean that, sir?
In a way that it means that, but that we will have a better understanding if we go through the explanation one.
Okay, sir. Okay.
So what explanation one says, for the purposes of this section and section 148A, the information with the assessing officer which suggests that income chargeable to tax has escaped assessment means, this is where the entire restriction operates. See, as you know, there are definitions which use the phrase shall include. The capital asset includes. So, whereas here it is means. So when it says means, it is a restrictive definition. It's a closed definition. Anything other than what is specified here cannot be considered as an information for the purpose of reopening an assessment. So what are those two issues or two kinds of information that enable the assessing officer to at least analyze them and to reach a conclusion whether this information is suggestive of escapement of income or not? These are of two types. One is any information flagged in the case of the SSC for the relevant assessment year in accordance with risk management strategy formulated by the board from time to time. So this risk management strategy is not formulated by the assessing officer. It is formulated by the Central Board of Direct Taxes from time to time. So that means it is not a static concept, it is a dynamic concept. So for 1 year, this risk management strategy may be, this formula may be one thing. The formula for another year may be another thing, depending upon the prevailing practices of tax evasion. The Central Board of Direct Taxes may define what are those kind of information that can be suggestive of income escaping assessment. So for a particular SSC, for a particular assessment year, this CBDT risk management strategy whatever is formulated. On that basis, some information should be flagged in his particular case. This flagging is done by the CBDT on the basis of this risk management strategy, which is formulated year after year. So only if there is any information already flagged, AO has nothing to do here, nothing to do anything here. It is already flagged. So now he has to only see that particular information, and that information, if it is suggestive of escapement of income, then only he can issue notice under 148. Then another kind of information is final objection raised by the Controller and Auditor General of India to the effect that assessment in the case of SSC for the relevant assessment year has not been made in accordance with the provisions of the Act. Normally, the second type of information normally comes into picture when an assessment is already made, but it is not mandatory. Even a regular processing of return also subsequently may be verified by the CAG and some issues may be pointed out, but normally our experience shows that the CAG objection normally comes only when an assessment is already made and that assessment is subjected to audit by the CAG. So the CAG goes through the assessment records and they come to know, or they give a finding that the assessment has not been made in accordance with the provisions of the Act. If they raise an objection like this, the assessing officer can also file his reply to this objection. He need not agree with every objection raised by the CAG. But if this reply given by the assessing officer is not accepted, then the objection becomes final. Only if the objection has become final objection, then that becomes an information for the assessing officer. He has to consider that and reopen the assessment based on that particular objection. So these are the only two types of information which the assessing officer can take into consideration for the purpose of issue of notice under 148. Now the question which you have raised earlier, Sujit, that the external information in the form of information from CBA or some other authorities, so that is nowhere mentioned here. That is nowhere mentioned here. Assessing it is unless that particular information is analyzed and if it is flagged in the particular case of the in the case of that particular SSC for that particular assessment year, then only it converts into an information which enables assessing officer to contemplate issue of notice under section 148 and otherwise not. So therefore, the restrictive definition of what is information more or less addresses all those cases which were earlier indiscriminately reopened by the assessing officers simply by saying that they have a reason to believe, though there was no material actually properly available to him to form such a belief. So according to me, this amendment addresses that particular issue.
Sir, so C&AG audit objection only has been mentioned. What about the internal audit objection? So it will not.
No, that is not mentioned.
That will not form as information.
Exactly.
Because still the internal audit is functioning in the department. So their objections will not be given weightage there.
No.
Okay. Okay, sir.
Only thing is that should be escalated to the CBDT. That should be flagged. That should be permitted to be flagged on the basis of that risk management policy.
Oh.
Then only it becomes an information. So,
okay.
Now there is an exception to this particular provision. The exception is in the form of an explanation 2. This is where I told you the understanding of the earlier provisions is very important. Now, if a search is initiated under section 132 on or after 1st April 2021, these are the cases earlier covered by section 153A. Now, a survey is conducted under section 133A on or after the first day of April 2021. This is nothing to do with the previous search assessments. This is a new insertion. Now, the assessing officer is satisfied with the prior approval of the principal commissioner or commissioner that any money, bullion, jewelry, or other valuable article or thing seized or requisitioned in case of any other person on or after the first day of April 2021 belongs to the SSC. This relates to the case of 153C. That means search is conducted in the case of one person, but that asset seized does not belong to that the other person, but it belongs to a third person. Third person is our SSE now for the purpose of 148. So, and likewise, any books of account documents seized or requisitioned pertains to or pertain to or any information contained in relate to the SSEs. All this wording, specific wording that is used very carefully and cautiously in all these subclauses of this explanation arises out of the previous provisions of 153A and 153C. If you have any knowledge of those provisions, your reading of this provision makes your job easier. Otherwise, for any doubt with regard to why a particular wording is used like this in this particular clauses, you have to refer to the case laws that are already available with regard to the old sections 153A and 153C. Now, what is the relevance of all these things being mentioned here? In all these cases, assessing officer shall be deemed to have information which suggests that income chargeable to tax has escaped assessment in the case of, see, for 3 assessment years immediately preceding the assessment. So that means, suppose a search is initiated on or after 1st April 2021. Let us say in the month of November 2021, a search has taken place in the case of an SSE. Now, 2021-22 financial year is the financial year in respect of which no search has taken place. Excluding this particular financial year, earlier 3 financial years, that is 2021, 1920, and 1890. So the corresponding assessment years. That means assessment year 21-22, assessment year 2021, and assessment year 1920. For those 3 years, there is no need for any information to be flagged. There is no need for any CAG objection. The assessing officer can automatically issue notice under section 140. So this is one place where they are trying to deal with search assessments by not going to a specific code as was there earlier in the form of 153A, 153BC, etc. But by virtue of the reassessment provisions only, they are trying to tackle the assessments relating to search and seizure cases. So either 153A case or a 153C case. Now the time limit is 6 relevant years can be automatically reopened. Now instead of 6 years, now there also the limit is now brought down to 3. Only 3 years they can go back, and for those 3 years, automatically notice can be issued under section 148. There is no need for the assessing officer to prove that there is information available with him suggesting escapement of income. This is the most important point. This is what is mentioned in this explanation. The only additional case that is sought to be brought in is that of a survey conducted under section 133A on or after the 1st day of April 2021. Now presently, if a survey is conducted, even the year of survey also, if there is a disclosure, but if there is no admission of, there is no impounding of any books of account, then there is no need for even a scrutiny. If there is a disclosure of additional income, and if that additional income disclosed is already offered in the return of income, and if there is no impounding of any books of account, there is a department circular which says that such cases need not be taken up even for a regular scrutiny also. Now, as against this, the provision now that is introduced now enables the assessing officer to automatically issue notices for 3 years preceding the financial year in respect of which, during which the survey under section 133A has taken place. Now that survey excludes 2 types of surveys provided in 133A, that is subsection 2A, 2 capital A, that is a TDS survey. A TDS authority also can visit a business premises, and for the purpose of verifying compliance with the TDS provisions, he can go through the books of account and other material. So such surveys don't fall in this particular case, in this particular scenario. And also subsection 5 is some huge expenditure incurred with regard to any function or a marriage or any event. So those are the type of cases. Those 2 type of surveys are excluded. Other than that, normally what we regularly know as a survey under 133A, that is covered here. And when a such survey takes place, then also there is no a restriction on the assessing officer that there should be information flagged in that particular case, or there should be CAG objection. Even without these two things also, he can contemplate issue of notice under section 148. This is the most important. Now, the only thing is, if we carefully observe here, if
Sir, one more
SRC
here, sir, one doubt.
yes, yes.
Sir, so in the case of any other person other than the person who is searched, okay,
Yes.
for them also the notices will be issued for preceding 3 years, because generally
Yes.
what they used to do is the information pertaining to which year, for that assessment year only they used to issue 153C notice and they used to
Yes.
do assessment. So what is the fate of such cases now?
See, now also the general belief that we are having is that they should confine only to the specific year in respect of which there is a document relating to that particular year or asset belongs to that particular year. But even recently I had interaction with the department officers. They are having an internal instruction that all 6 years they have to reopen under 153C. Only thing is they will automatically close the proceedings for the other years, and only for those years for which there is a specific information, they are going ahead with the assessment. So finally, when you see the assessment orders, you will have assessment orders only for 1 or 2 years, but proceedings will be there for all the years. Proceedings are dropped for the other years. So that is why you are not finding an assessment order for the other years. So now the same provisions here also. The only point is, the most important thing is assessing officer is satisfied. This word is there when compared to clause 1 and clause 2. Clause 1, a search is initiated in the case of an SSC on or after 1st April 2021. These are the 153A cases. 153A cases now also automatic. No need for any satisfaction. Survey is conducted under 133A, automatic. No need for any specific satisfaction. But 153C cases, earlier also there was a requirement of recording a satisfaction. Without recording satisfaction, you are doing the assessment of a person who is already subjected to search. While doing his assessment, you reach a conclusion, you derive a satisfaction that the asset found in the case of this particular person is not does not belong to this person. It actually belongs to a third party. Or a document found in the case of this particular person, the information therein does not pertain to this person, it relates to the other person. That satisfaction has to be recorded first. Then this is handed over to the assessing officer having charge over the other third party, and that particular assessing officer has to issue the notice under 153C. This is the procedure laid down under 153C right now. For detailed case laws, you can refer to section 153C. So the satisfaction concept continues now also. That is the most important thing now. Not necessary that wherever a search takes place in the case of X, case of X can be automatically reopened for 3 years. Case of Y or Z or A or B or C or D cannot be automatically reopened. For that purpose, it is necessary that an assessing officer records a satisfaction. Assessing officer is satisfied, and not his own satisfaction. It is also should be approved with the prior approval of the principal commissioner. These are the two important safeguards that are provided now also. Only then he can issue a notice under 148. Now, if you carefully see 148, earlier when we have gone through that, 148 provides two conditions. One is there should be a prior approval and there should be information. Information is defined as information flagged or information in the form of a CAG final objection. Now, for the purpose of issue of 148, there is a prior approval required. Now, for the purpose of this subclass 3, there is a satisfaction to be recorded with prior approval. That means, if there is a search in the case of X, if the assessment of Y is to be reopened, there should be two separate satisfactions, two separate approvals. One approval for the purpose of recording the satisfaction that material found in the case of X belongs to Y, or asset found in the case of X belongs to Y. That is one approval. And another approval is when you are actually issuing 148 notice, there should be another approval. So 2 times there should be approval. One approval is not sufficient. in the same approval, CIT may say, I'm also approving the issue of notice under 140. That is a different matter. But his approval is required for two different actions of the assessing officer. One action is that of assessing officer reaching a satisfaction. The other action is the assessing officer issuing a notice under section 148. Both require the approval of the principal commission. So I have tried to summarize the provision. Notice under 148 can be issued only with prior approval of the specified authority. AO shall have information suggesting that income chargeable to tax escaped assessment. Information is defined as information flagged by the CBDT and final objection of CAG. Automatic issue of notices for 3 years in case of search and survey. This is how we can summarize the provisions of 148. Now, another most important section is 148 capital A. It lays down certain now procedure which has to be necessarily followed by the assessing officer before issuing a notice under section 148. What it says is the assessing officer shall, again the word shall, before issuing any notice under section 148, conduct any inquiry if required with the prior approval of specified authority with respect to the information, provide an opportunity of being heard to the assessee, notice to show cause within such a time, not less than 7 days but not exceeding 30 days. And that notice should specify the opportunities as to why a notice under 148 should not be issued on the basis of the information, and consider the reply of the assessee and then decide. Decide means he has to pass reach a decision and pass an order on the basis of material available on record, including reply of assessee, whether or not it is a fit case to issue a notice under section 148 by passing an order. So earlier, if you remember the procedure, when a notice under 148 is issued, we have to first file a return of income. Then only you are entitled to ask for copy of the reasons that were recorded by the assessing officer. After going through the reasons, you can raise an objection that on the information considered for the purpose of recording the reasons is erroneous, or that information does not have a live nexus with the belief formed by the assessing officer that income escaped assessment, and raising various kinds of objections, or that the particular year there is a time limit has expired, various objections, whatever is possible as per the section, you can raise, and assessing officer has to deal with the objection and pass a separate order. And you can contest that particular order separately by way of writ petition, or wait for the assessment to be completed and contest that by way of an appeal, along with other grounds of appeal raised in the form number 35. This procedure I hope all of you may be familiar with. Now, the procedure is exactly opposite. It is a very, very beneficial move or beneficial amendment from the perspective of the assessee. Now, what it says is, if the assessing officer has any information which suggests that income of a particular assessee has escaped assessment for any relevant assessment year, then he has made up his mind to issue a notice under 148. Now, before issuing 148, he should first conduct inquiry. Simply on the basis of information, he cannot jump to a conclusion. Even if some external information is flagged in the case of a particular assessee, he cannot automatically jump to a conclusion that the income has escaped assessment. If that information requires that some inquiries are to be conducted, the assessing officer has to necessarily conduct that inquiry, because the word used is shall. The assessing officer shall, before issuing any notice under section 148, conduct any inquiry if required. So conducting inquiry now takes place first. Now, even before giving an opportunity to the assessee, that means after conducting the inquiry, suppose the results of the inquiry reveal that actually there is no escapement of income, then the proceedings have to be dropped then and there. The question of even providing an opportunity to the SSC does not arise. Now, after conducting the inquiry, if the assessing officer feels that it is a fit case for reopening, then he cannot automatically go for issue of notice under 148. He has to provide an opportunity of being heard to the SSC. Now, this opportunity is what? In this opportunity, he has to clearly ask the SSC as to why notice under 148 should not be issued on the basis of the information which suggests that income chargeable to tax has escaped assessment and results of inquiry conducted if any. So, the assessing officer should put forth before the SSC the information which he has taken into consideration and also the results of the inquiries that he has made, and then provide an opportunity to the SSC to raise his objections. Now, SSC is given some time to furnish the reply. If within that time SSC furnishes reply, assessing officer has to consider that reply. If before the expiry of the time limit, the SC does not provide any reply, then automatically on the expiry of the time limit, the assessing officer has to pass an order, decide on the basis of material available on record, including reply of the SSC, whether or not it is a fit case. So this, whether or not it is a fit case, this is one area where again the reason to believe concept again comes into picture. So whether or not it is a fit case, what does it mean? He has to now reach a conclusion that on the basis of this information, there is income escaping assessment. At least this information suggests that income has escaped assessment, and that is why it is a fit case to issue notice under section 148. And this decision cannot be an oral decision or something which is kept back with him. It should be by passing an order. And if you remember section 148, the assessing officer shall serve on the SSC a notice under 148 along with a copy of the order under 148A. So this order now referred to in section 148 subsection D is the order which the assessing officer has to serve to the SSC along with the notice under section 148. So this is the mandatory procedure now to be followed by the assessing officer whenever he proposes to issue a notice under section 148. However, as I have already mentioned you, the search assessments also now start to be dealt with by these reassessment provisions only. So therefore, if it is a case of 153A or if it is a case of erstwhile 153C, then those cases, it is not necessary to follow this particular procedure. That means the providing an opportunity to the SSC and passing an order under 148A subclause D is not required when it is a case of erstwhile section 153A and 153C. These are the three exceptions mentioned here. Provided, I have already mentioned proviso is always an exception. 148A says you follow the procedure and pass an order under 148A. Proviso says this section does not apply. That means order need not be passed prior to issue of notice under 148. Search initiated under 132. Then assessing officer is satisfied with the prior approval of the principal. The same 153C, whatever we have discussed earlier, those are the B and C relate to 153C. If you have carefully analyzed the earlier section and now the present section, 148 explanation also provides for four situations where it is deemed that assessing officer has information suggesting escapement of income. Not necessary that there should be some information flagged or there should be a CAG objection, as I already have explained in detail, in 4 circumstances. In the 4 circumstances, clause 1 is 153A, clause 3 and 4 are 153C, clause 2 is 133A. Now, if you come back to the present provision, here how many clauses are there? Clause A, one that is relates to 153A, B and C relate to 153C. So you can see that 133A is missing. So that means as far as survey cases are concerned, though though the assessing officer is deemed to have an information in respect of 3 years preceding the year of survey, the mandatory procedure that is to be followed under 148A, there is no exception. That means automatic issue of notice under 148 is not permitted as far as survey cases are concerned. For survey cases, the assessing officer has to necessarily follow the procedure under 148A. That means conduct inquiries wherever required and issue notice to the assessee along with the results of the inquiries, providing him an opportunity to raise the objections, consider the objections of the assessee and pass an order. This is the procedure prescribed under 148A. All this procedure has to be necessarily followed in respect of 133A cases. 153A and 153C cases, neither this procedure is required to be followed and nor there is necessity of any information flagged in the case of the assessee or a CAG objection is also not required. So I have tried to summarize the provisions. Mandatory steps to be followed before issue of notice under section 148. Conducting inquiry if required. Now, shall conduct inquiry if required. You see that the assessing officer shall, before issuing any notice under section 148, conduct any inquiry if required. So it says shall and also it says if required. So whether it is mandatory or not. So it has to be interpreted like this according to me. Wherever the statute exempts the assessing officer from following procedure under 148A, then conducting inquiry is not required. For example, 153A case, 153C case, 148A procedure is not required. So therefore, question of conducting inquiry does not arise. But in all other cases, so for example, survey case or any other case, conducting inquiry is a must. He has to conduct an inquiry. He cannot keep the inquiries on hold and to be done after the notice under 148 is issued. Earlier, what they were doing, simply on the basis of some information available with them, they use it to form a belief and issue a notice under 148, then start making the inquiries. That is not the procedure. In fact, Supreme Court has long back held that inquiry should precede the formation of belief. Formation of belief should not precede the inquiry. This is a long back itself, Supreme Court settled this proposition of law, but unfortunately that is not followed in true spirit. But now the statute provides for a mandatory requirement that assessing officer has to necessarily conduct the inquiries required, and then only the notice can be issued under 148. And show cause notice to the assessee, passing of order to decide whether notice under 148 is required to be issued or not, and then prior approval of the specified authority is a must at all three stages. This is most important. See, if you see at all levels, there is a prior approval of the authority. Conduct any inquiry if required with the prior approval of the specified authority. Provide an opportunity of being heard to the assessee with the prior approval of the specified authority. Decide on the basis of material available by passing an order with the prior approval of the specified authority. So at every stage, there is a prior approval of the specified authority. That means assessing officer's hands are now tied up. At various stages, there are approvals to be taken by the assessing officer. He cannot act on his own at his whims and fancies to indiscriminately issue notices under section 148. So many checks and balances have that way been built into the amended provisions. Now, section 149 speaks of the time limit. They are in a way simple provisions. Now there are only two time limits. One is a 3 years time limit. The other one is 10 years time limit. Though apparently it appears that on one hand, they were trying to say that time limit has been reduced from 6 years to 3 years. But on the other hand, they have taken powers to issue notice for 10 years. It appears as though at a first look that the provisions are really not so very beneficial to the assessee. But if you have a real good look at the amended provisions, you can understand that it is not very much harmful to the SSE, because this extended time limit of 10 years comes with various restrictions. Let us try to see those restrictions. Normal time limit of 3 years, I don't need to explain you. It is 3 years from the end of the relevant assessment year. Now, for going beyond 3 years, but up to 10 years, there is a condition. The condition I have underlined. Assessing officer has in his possession books of accounts or other documents or evidence. So two conditions here as such, already two conditions imposed. One is there should be books of accounts or other documents or evidence. First thing. Second thing, where should they be? They should be with the possession of the assessing officer. It should be in his possession. Already he is in possession of those books of accounts or other documents or evidence. Now, what is it that he has to gather from that information? Whether simply having possession of the books is sufficient? No. These books of accounts or other documents or evidence reveal is a very strong word. Reveal means there should be that should speak. The document should speak. There is no room for any interpretation. There is no room for any opinion to be formed by the assessing officer. The document should speak that there is income chargeable to tax, and it is represented in the form of an asset. And that type of income has escaped assessment, and it comes with some more condition that such escapement of income is likely to amount to 50 lakhs rupees or more for the year. These are the various restrictions imposed. That means not all cases can be reopened beyond the time limit, regular time limit of 3 years. Only the first simplest condition we can easily understand is the income escaping should be 50 lakhs rupees or more. This is a simple condition. That means in case of escapement of income having implication of less than 50 lakhs rupees cannot be reopened beyond 3 years. So simple as that. Now, even if the escapement of income is more than 50 lakhs also, that income should be an income which is represented in the form of an asset. What does it mean? Suppose some expenditure is incurred in the earlier years outside the books of account. There is no source. Now, that evidence is now found at the time of search or some other survey or some other proceeding. That is more than 50 lakhs. But such assessment year cannot be reopened now because the income is not in the form of an asset. The amount is already spent. It is in the form of an expenditure. So therefore, such cases won't fall within the extended time limit of 10 years. So these are so many restrictions like this. So technical disallowances like 40A2, 40A3, 40A1A, etc. Once 3 years period is over, there is no power for the assessing officer to tinker with these issues beyond 3 years. Incorrect claim of expenditure incurred outside the books of account. These are the various type of issues which we can say these are all the incomes that do not represent any asset. But cash credits is, according to me, a debatable issue. There is a cash credit and there is evidence showing which reveals that these cash credit entries are bogus entries, and there is a corresponding asset on the asset side of the balance sheet. Now, cash credit per se is a liability. This income does not represent any asset, but this loan is the source for acquiring an asset, which is already disclosed in the balance sheet. So according to me, this is a controversial issue. We will certainly argue that cash credit per se is not income in the form of an asset. It is in the form of a liability. Whereas department would try to say that, no, cash credit, though it is a liability, it is on the basis of this cash credit only you have purchased some asset. So therefore, it is in the form of an asset.
Sir, so trade creditors will be out of the purview, sir. Does it mean? Because trade creditors will be spent. It's an expenditure. It will not be an asset.
No, trade creditors, see, trade creditor lying in a balance sheet, they result
Yes.
in some asset only. See, purchases is different. Bogus purchases, no problem. Bogus purchases detected subsequently, no problem, because bogus purchase is only an expenditure. Whereas a trade creditor, bogus trade creditor, the creditor is in the balance sheet. It is a liability. Once there is a liability in the balance sheet, as accountants, we know there is a corresponding asset on the asset side. So even in the present provisions also, any intelligent officer, he is not making addition directly for the trade creditors. He says, you remove this creditor in the balance sheet, there are all the assets to that extent get unexplained.
Yes.
So therefore, he makes addition towards unexplained investment only. Because trade creditor per se, there is no cash involvement. We have not got any cash. Purchase is
Yes.
debited, party account is credited. So
Yes.
purchase you are accepting because quantitatively, unless that quantity is purchased, the quantity cannot be sold. So purchase assign
Yes.
has to accept. So once purchase is accepted, how is that the creditor becomes unexplained? Creditor is getting
Correct.
explained because of the entry for. So if an intelligent officer is there, even now he is not making addition under that section, under 68. He is making addition under 69, treating the assets in the
Okay.
balance sheet as unexplained. So therefore, the caveat which I have already made, that cash credits I am skeptical. The same proposition extends to trade creditors also. So trade creditors
Sir,
do not
one
stand
more
on
thing,
any
sir.
different
This,
footing.
yes, sir. One more thing. This 50 lakhs per assessment year, right? That
Per
concept is
assessment year.
getting
Yes,
continuing,
yes.
right?
Yes, yes,
So
yes.
to issue that notice under 148 for the relevant assessment year, the income escaping assessment should be 50 lakhs or more.
Yes. Presently,
Okay.
only such cases only that provision is there. Only such cases.
Now extended it to survey cases also due to this.
All
They
cases,
brought
all
in
cases.
survey, all cases.
All
Otherwise,
cases.
survey was within the maximum they could go up to only 6 years.
6 years.
Survey. Now for
Yes.
that also and other cases also they got this extended time limit of 10 years.
10 years. So what I am trying to say is, see, if an SSC still wants to have some assets which are unaccounted, we should not worry about such kind of assets anymore. See, government is trying to help them on the cause of ease of doing business by making so many amendments in the procedural part. And still, if the SCs, they want to continue to their old habits, and if they want to take the risk of maintaining undisclosed assets for individual years of a value of more than 50 lakhs, they have to face the magic. They cannot be protected unless some procedural errors are committed by the assessing officer while issuing the notices. And there is one small exception that is provided in this particular time limit. What it says is, if a notice under section 148, as per the old provisions, cannot be issued in respect of a particular year, that cannot be issued even now under the new provisions. So that means for some of the assessment years, by 31st March 2021, the time limit is over. Even in fact, the cutoff point is not even 31st March 2021. Cutoff point is the date on which the assessing officer proposes to issue a notice under 148. Suppose in November 21, somebody wants to issue a notice. As of November 21, whether that particular notice can be issued under the old provisions or not. Suppose under the old provisions, notice cannot be issued. Even in the new provision also, notice cannot be issued. So that means the extended time limits will keep operating only in the future years, not for the years already completed. I hope you could understand. For example, assessment year 14-15. For 14-15 in November 2021, notice cannot be issued, or because 6 years time limit is already over. Now, if from under the new provisions, if you calculate 10 years, you can go back to 14-15. Because 14-15 certainly falls within 10 years, but no, notice cannot be issued. So that means the safeguard in the form of the time limits under the old provision continues for this overlapping time. After some time, then all years fall within the block of 10 years. Till such time, during this transition takes place, the SSC is protected. That is how this provision reads. And certain small provisions like these are helpful to the assessing officer, because sometimes what happens after receiving 148A notice, you may go to the court straight away without even raising objections before the assessing officer. That notice itself is challenged before the court. Sometimes it happens like that. The court gives interim injunction, it stays the operation of such notice. So whenever such situations happen, the assessing officer gets some extended time limits for passing the order and the issue of notice and all that. So these are all saving provisions that help the assessing officer. Not very relevant right now. Most important thing is income represented in the form of an asset. That is what does an asset mean? Here I underlined asset shall include. This is an inclusive definition. So when an inclusive definition is there, whatever follows is only an illustrative list. This immovable property, land or building or both, shares and securities, loans and advances, deposit in bank account. These are all only illustrations. There can be some other form of asset also. If it basically satisfies the definition of an asset, then all those assets will be covered under the for the purpose of extended time limit of 10 years. Because they have referred to the earlier time limit to safeguard the some of the years from due to transitional years, I have just extracted the previous provision. The clause they have referred to is 4 years, but not more than 6 years. That means up to 6 years, whatever that notices could not be issued earlier, beyond 6 years, those notices cannot be issued even now in the new provisions also. So normally time limit is only 3 years. Extended time limit of 10 years is applicable only when income escaping is 50 lakhs or more. Income is represented in the form of an asset. Income is revealed by books of account, other documents or evidence in the possession of the assessing officer. Cases where search was initiated under 132 before 31st March, the old provisions of 153 and 153C will be applicable. For any assessment year prior to assessment year 2022-23, extended time limit applies with the restriction that notice shall be within the time limit as prescribed in pre-amended 149(1)B. This is what already I have explained. Now, actually it's a very intricate legal issue. You can go through it afterwards also because this PowerPoint will be shared to you. See, they have used different kind of wordings at different places. In 153C, they said, nothing contained in this section shall apply in relation to a search initiated on or after the first day of April 2021. That means if any search is initiated after 1/4/2021 and on account of that particular search, 153C notice is to be issued, then 153C is no more operative. You have to go back to section 148. But in 148, we have already read some conditions where the mandatory procedure need not be followed. There the word used is seized or requisitioned on or after 1st April 2020. See, there is an important point here. Now, a search may take place before 31st March 2021. What 153C3 says is, subclass 3 says is, if search is initiated after 1st April 2021, then 153C is not applicable. Now, here, search is initiated before 31st March 2021, but seizure takes place after 1st April 2020 because search continues even after 31st March. So during the course of search, seizure can take place anytime because sometimes they put a prohibition order and later on that prohibitionary order is lifted and at that time the lockers are opened and at that time also seizure takes place. So it is a legal issue which is wide open, but some confusion in the wording. Probably they will clearly come out with an explanation or clarification with regard to this issue. To me, what they should clarify is, for any search initiated before 31st March 2021, even if the seizure takes place after 31st March 2021, then the notice should go only under 153C, not under 148. because for 153A purpose, it is initiation which is important. Completion of search is not important. If search is initiated after 1/4/2021, 153A is not applicable, 148 is applicable. If search is initiated before 31st March 2021, 153A is applicable, 148 is not applicable. 148 is not applicable. Whereas when it comes to 153C, also there should be same position. If search is initiated in respect of the main person before 31st March, irrespective of the fact when the seizure takes place, the proceedings should be under 153C only, is my point. Because otherwise what happens? For one person it becomes 153A, for the other person it becomes 148. Some confusion again. It should not be like that. Because either the old code should not be completely applicable or the old code should be completely applicable. It cannot be for one person old code is applicable, for another person new code is applicable. I don't think that is the intention of the legislation. Probably shortly they will come out with a clarification on this issue. Now every stage we have seen this specified authority, specified authority, specified authority. What is this specified authority? For 3 years, up to 3 years, within 3 years when the notice is issued, specified authority is principal commissioner or his equivalent authority, director, principal director or commissioner. Now, if it is beyond 3 years, it is principal chief commissioner or principal director or chief commissioner or director. So you see, normally chief commissioner is a very high position. Now, if a notice is to be issued beyond 3 years, then it is with the prior approval of the chief commissioner only the notices can be issued. And how many times the approval is required, we have already seen. Because before 148, 148A procedure is to be followed. If 148A procedure is to be followed, for inquiry, first he has to take the permission of the chief commissioner. Again, after results of the inquiry have come, whether to pursue further by issuing show cause notice to the SSC or not, again, prior approval is required. After issuing the show cause notice and considering the objections of the SSC while passing the final order under 148 subclass D, again, prior approval of the chief commissioner is required. So at every stage, it is though the assessing officer is the face of the department, the person who is taking the real decision, whether the case is to be pursued with or not, is the chief commissioner, but not the assessing officer. So normally it is expected that a higher authority, a person occupying a high position will have a broad mind. He will not be simply worried about revenue targets and indiscriminately apply the provisions of the Act. So therefore, this is another way the government thinks a protection is given to the SSC that a case is not reopened unless it is imminent to do so, unless it is imminent to do so, unless it is very, very important, unless there is a clear case of escapement, the reopening should not be made. At least this is the funda of the government as far as the amended provisions are concerned. How far these turn into a reality, that we have to wait and see. But the provisions as they stand today, as they appear from the statute book, I consider the SSCs are in a blessed position when compared to the previous statute. They are in a better position. They can plan their affairs in such a way that after 3 years, they can be rest assured that yes, my case is over, my case is completed. I am not going to be visited with any notice of reassessment. This is one confidence the SSCs can have on the department because of the new procedure that is laid down in the amended provisions. Section 150.
Sir,
yes.
One thing anyone can be rest assured is no last minute 148 on 31st March of the
Yes.
because of
No,
all
that
this
is
procedure.
Yes, of course. True. The assessment has to be completed within 12 months from the end of the assessment year, from the end of the financial year in which the notice under 148 is served. Now, here one important aspect I would like to (149) if you see, no notice under 148 shall be issued for the relevant assessment year if 3 years have elapsed from the end of the relevant assessment year, unless the case falls under clause. So here it talks about issue of notice. Now let us come to 153. No order of assessment, reassessment, etc., in which the notice under 148 was served. So many times I get a phone call from many times the consultants that the notice was served after the time limit specified under 149. Notice is served after the time limit specified under 149. They have a feeling that that notice becomes invalid. No, because 149 only refers to issue of notice. The issue of notice shall be within the time limit. Whereas the service of the notice under 148 or the completion of the assessment under 153, 153 only the time limit is with reference to service of notice under 140. 148 of course uses the word service of notice. So what is required is within the time limit under 149, notice shall be issued. That's all. Now notice can be served at any point of time before the time limit specified under 153. And of course, assessment also shall be completed within the time limit specified under 153. So once the assessing officer is able to serve the notice, the service date is important. From the date onwards, he gets extended time for completion of the assessment. So there is no point in avoiding service of notice under 148. Of course, nowadays, everything is digital. So in any case, it is deemed to have been served once it is uploaded in the web portal with a DIN number and sent to the email address of the SSE. It's automatically deemed to have been served. That apart, it is never beneficial to the SSE to postpone or delay the receiving of the notice. Sometimes they try to send back the postman saying, tell that I am not available, my door is locked, like that. I have seen some cases where they try to manage the postman. There is of no use because you are unnecessarily postponing the time limit for the completion of the assessment. So the issue of notice and service of notice are two different things actually.
Yes.
This is another important issue which you might have all already come to notice. The fate of notices issued under the unamended provisions for assessment year 13-14 and 14-15 after 31st March 2021, but before 30th June 2020. See, for 13-14, the time limit is 31st March 2020, 6 years. End of the assessment year, 6 years means 20th March, 31st March 2020. 14-15, 6 years, 31st March 2021. Now, this 13-14 notices, because COVID started on 22nd March 2020, that means the lockdown started on 22nd March 2020, is Taxation Laws Amendment Act that has extended the time limit initially up to a particular date. Like that, it went on getting extended. So for these 2 years, the extended time limits are up to 30th June 2020. So it so happened that the department issued some notices after 31st March 2021, but before 30th June 2021 for 13-14 and 14-15. So far, so good. There is nothing wrong because Taxation Laws Amendment Act permits them to issue the notices beyond the specified time. But what they have done, they have issued notices under 148 straight away. They have not followed the mandatory procedure prescribed under 148A. See, the provisions of Finance Act 2021 have come into play with effect from 1st April 2021. That means any notice to be issued under 148 on or after 1st April 2021, the condition under 148 itself is he shall serve a notice under 148 along with a notice or copy of the order under 148. So if you have not even initiated the procedure for 148A, where is the question of your being able to serve the order under 148? That means the mandatory procedure is not followed. Now, is it justified? So they have issued a notification. They have issued a notification trying to say that the Taxation Laws Amendment Act, whatever notices are to be issued up to 30th June 2021, for that purpose, the old provisions will apply, the new provisions will not apply. So therefore, the question arose whether by way of a notification, the provisions of a Finance Act can be done away with or not. Finance Act 2021 says you have to follow the procedure from 1st April 2021. Some notification is issued saying this procedure need not be followed. Notification is known as legal parlance, it is known as delegated legislation. A delegated legislation, whether it can overrule or overtake the position prescribed under the main statute. That is the now heated controversy or burning topic as far as this particular notices issued during this 3 months period. Now, Chhattisgarh High Court has taken an adverse view, but Allahabad High Court passed a detailed order. They disagreed, they dissented with the judgment of the Chhattisgarh High Court, and they clearly held that these notices cannot be saved. They become invalid because the provisions of Finance Act 2021 become operative from 1st April 2021, and therefore the old laws cannot be made applicable just because the government has issued a notification. So that is one important aspect. If any of your SCs have received any such notices, the validity of such notice can be contested even at the time of filing the appeal. It is not necessary that you have to file a writ petition. Now, issue of notice and service of notice, which I was referring to, the time limit specified in 149 is with reference to issue of notice, whereas time limit specified in 153(2) for completion of assessment is with reference to service of notice. This difference is what you have to clearly observe. So if a notice is issued within the time under 149, then assessment can be made and the notice can be served under 148 even after the time limit specified under 149. This is not a new thing. This has been held very long back by the Supreme Court. I have given that citation 166 ITR 163. Now there is so therefore what assumes more significance is when a notice can be said to have been issued. This is the most important point. Now what happens most of the times, because 31st March 2021, let us say, is the last date for issue of a notice. So they will simply sign the notice with a back date. Where do you stand? Now, of course, DIN number has come, DIN number has to be generated, but otherwise a notice can be signed with a back date. So for that purpose, issue of notice, this will may be helpful for you for some of the assessments which are already taken up on the basis of old provisions. So that is why I have mentioned this case law. So issue of notice means the assessing officer should lose control of the notice. That is the crux of the issue. That means that even if he wants, he cannot take back the notice. Then only it can be said to have been issued. If it is signed, all notings are made in the file, is other clerk or inspector, somebody has also countersigned, but everything is done, but it is kept in the file. No, because he can recall that notice. But if it is already given to the post office, then whether the postal authorities actually commence the delivery after that date or not, that is not relevant. The actual delivery of the parcel may start or the cover may start after that date. But the assessing officer cannot again go back to the post office and take back the cover. Once it is issued to the postal authorities, it will only move forward. It will only reach the destination. So that is what it means. Once the assessing officer loses control of the notice, then that is the point of time when a notice can be said to have been issued. Just I have extracted the relevant portion of the judgment. You can go through leisurely. This para 16 is very important. To send out means to place in the hands of a proper officer for service. Now, audit objection, whether all kinds of audit objections will become an information or not. In that regard, there are two Supreme Court decisions. One is Indian and Eastern Newspaper Society case, where they have held that an opinion of an audit party with regard to a particular section, that means depreciation at a higher rate, whether it can be given in respect of a transport business or not. Because for a vehicle engaged on hire, higher depreciation is allowed. But suppose SSE himself is engaged in transportation business, whether it amounts to hiring of the vehicle or not. Like that, there will be so many legal issues. Like that, where suppose a forklift is there, whether forklift is also a road transport vehicle or not. Like that, many legal issues will be coming across day in and day out. So with regard to a legal issue, assessing officer might have taken one view. Audit party may have a different view. So that means they are only expressing their opinion about a legal provision. Such opinion expressed by a legal audit party, C and AG, cannot be an information. Whereas if there is a factual error, and if that factual error is brought to the notice of the assessing officer, then that becomes an information. So PVSBD is in favor of the department, whereas Indian and Eastern Newspaper Society is in favor of the assessor. Now, approval of the specified authority. This is what we have come across at various stages under 148 and also 148A. Now, what does this approval mean? There are already decisions, court decisions, which say that this approval has to be after due application of mind on the part of the specified authority. So when it can be said that the specified authority has applied his mind, only while giving the approval, whatever he writes at the time of giving the approval, that only will reveal his mind. Otherwise, what is going through the mind of the specified authority, who knows? There is no mechanism for anybody to know, to peep through the mind of the specified authority and know what exactly was going through his mind while he was giving the approval. So therefore, it becomes mandatory on the part of the specified authority to record his satisfaction, to at least mention a few words about how he is satisfied that this case that is put up before him by the assessing officer requires to be approved. To this extent, there should be an observation in the approval. Without that observation, that approval is no good approval, and on that basis, many notices have been struck down by the high courts. I have given a citation of My Car Pune Private Limited and also Principal CAT versus NC Cables Limited. These are the two different high court decisions which you can go through for the purpose of understanding what is an approval. Now, I have tried to give here a checklist for SSC. Now, 148 capital A is the first section to be invoked by the assessing officer before even issuing a notice under 148. So therefore, unless it is a search case or survey case or 153C case, this procedure is compulsory. 148A procedure is, even survey case also 148 procedure is compulsory. So when 148A procedure is to be followed by the assessing officer, you will not be knowing that he has taken an approval first for conducting inquiry. You will not be knowing that he has taken an approval for issuing notice to you, a show cause notice. You will only receive the show cause notice. So therefore, when you receive the show cause notice, asking your objections as to whether it is a fit case or not for issue of notice under 148, then what is your duty? Your duty is you have to anyhow give the reply to the notice because you are bound to give reply to the notice. But before that, you should seek some information from the assessing officer. This is where I find many of all our counsels, our consultants failing on this aspect. That becomes that makes the job of the person who is subsequently dealing with the appeals very difficult. So at the stage of assessment, it is a very simple task actually. So you should first ask the assessing officer, see, you have given me a notice under 148A. That means you have an information. Unless information suggesting the escapement of income, you cannot issue 148A notice to me. So therefore, what is that information you have? If it is already clearly discussed in the notice, that is no problem. But many times they don't discuss in detail. So therefore, exact content of the information also you are empowered to see. We may refer to some information received from XYZ, but that is not sufficient. You want to see what is that information. So you can ask for that copy of the information, first thing. Then you have to also ask for approval of the specified authority obtained for the purpose of conducting inquiries. What are the inquiries conducted, and for that purpose, whether you have sought for approval of the specified authority, and also copy of the approval. Why copy of the approval is required? Because just now we have seen approval does not mean a mere approval. Approval should be after due application of mind. How do you know whether application of mind was there or not? Only when you see the copy of the approval on the basis of the approval wordings recorded by the specified authority in the approval, then only you will be knowing whether there is due application of mind. So therefore, you should also ask for a copy of the approval of the specified authority. Then you should also ask for the inquiries information collected during the course of inquiry. Inquiry does not mean making some phone call or something like that. So that should be on the basis of some correspondence so made by the assessing officer. So what was that correspondence? What was the information collected in the process of that conducting of inquiry? Then 148A show cause notice also automatically cannot be given. For that also again approval is required. So again copy of the approval, whether you have taken the approval or not. So this is all the information that you have to necessarily ask when you receive a notice under 148A subclass B. When a notice under 148 is issued, again you have to ask for 148D order if it is not served. Section itself says, 148 itself says you should also serve the order under 148A. But if for any reason he has not served that order, you should ask for a copy of the order. And then you have to also ask for the approval of the specified authority again, because for 148 notice also, for issue of notice of under 148, again approval is required. So that copy of the approval also you have to ask. Then if that 148A order appears to be patently illegal, then you have an option to contest it in the form of a writ petition. Otherwise, you can wait. You can wait for the final proceedings. You can wait for the completion of the assessment. And while filing appeal against the assessment, you can also raise all such grounds which go to the root of the issue, that the 148A procedure was not properly followed, or that 148 was not properly issued, or approval was issued in a mechanical manner. All these grounds you can take while in the appeal straight away without going to the High Court. So friends, this is what I wanted to share with regard to the amended provisions. I have tried my best to explain the things in as simple manner as possible without going much into case laws and all those things. In any case, these are the new provisions. Interpretation will follow. As of now, today we have only the core provision that is available to us. And if there are any specific issues that I have missed out, or if you want me to supplement on any particular issue, I shall be happy to do that. But before that, I shall express my sincere thanks to all the committee members of the ICSA Nellore branch for having thought of me to give this presentation to your branch members. I'm extremely grateful for giving me this opportunity, and it would be my pleasure to be associated with your branch in future also. Thank you. Thank you for a patient listening.
Thank you, sir. So members, if you have any doubts, now is the time to ask.
TV Prabhakar sir, I think you have a doubt. You have raised a. You can unmute and you can directly ask the question, sir.
Hello, sir.
Yes, yes.
Sir, all the three conditions said in the notice are cumulative, or I mean that 50 lakhs above and having books of accounts in their possession and having information. All these things are cumulative or independent?
Cumulative.
So that means unless the assessing officer is having the records and all the books in his possession and the information is also with him and the escaping of the income is also 50 lakhs above, then only he can go for that.
Exactly.
Okay, sir. Thank you.
Sir, one more small doubt, sir. When I have gone through the income tax website, the date on which the notices were uploaded to the website or the date on which the DIN was generated, both the dates were not being mentioned in the portal, sir. So when we are going to take that whatever notices were uploaded in the portal are being served, so the dates has to be mentioned there, no, sir. So whether any issue was there in this regard, sir?
No, there is a specific provision to verify the DIN. Verification of DIN, there is a separate provision. If you go to Google, if you say verify DIN, that takes you directly to that particular place. So there, if you give that DIN number, then it also gives you the validation, whether the DIN was validly issued on the date or not. So,
Thank you, sir.
but it is a must. It is a must that without a DIN number, a notice cannot be generated. If an assessing officer still tries to do such things, on that basis, the notice becomes invalid.
Okay, sir. Thank you, sir.
Sir, what is the fate of the issue of assessment order, sir? Whether this concept of losing of control will apply to this issue of assessment orders within the time limit?
No, assessment shall be completed within the time limit. There is no provision that the order should be served within the time limit or issued within the time limit. The computation of the tax shall be made final before the last date. You cannot simply say your assessment, all these additions are made, but suppose demand notice, whatever amount is to be mentioned, suppose that is not prepared on the same date, then it is lost. Demand notice also should be on the same date.
Okay, so that demand notice has to be, it has to be generated from the ITBA.
Yes.
With DIN, right? For notice of
Yes.
This demand 156
Yes.
notice.
Yes.
That has
Yes.
to be from, it should accompany a DIN for that also.
Correct. Correct. Correct.
So, similar concept when it comes to section 263 also. For the CIT,
263, yes. He has to pass the order.
That's it.
That's it.
So
Only thing is, we had an interesting case in Visakhapatnam. We won that case. See, the order was stated to have been passed on a particular date, but the SSC has received it after 9 or 10 months. So there was an inordinate delay. So therefore, we have raised this issue that the notice, the order, though said to have been passed within the time limit, is barred by time. Now, luckily, the tribunal was pleased to call for the record of the department and ask them to show from their records that this order was passed before that particular day. So they could not show. They could not show because actually the order was not passed before. Because if it was passed, then it will be automatically entered in some dispatch register or something like that. So the dispatch register they could not show. So therefore, that order was cancelled.
Okay.
So only in such exceptional circumstances only you can raise this issue. The normal delay, like see today the order is passed, it takes 5-6 days or 10 days to deliver that order to you. That won't mean the order is illegal.
Okay. So
Service
for 10
of
days
order is
it is
not a must.
Not a must. Yes, agreed, sir. So this early now by a letter we could ask for the note of satisfaction of CIT. Sir, for earlier cases before this 148A, getting this note of satisfaction is like a boon or something. Very difficult. They for reasons they may give, but they never used to share the approval note. So what was the recourse then, sir? Only RTI or anything else, sir?
RTI is the course of action, and if you have a proper record to show that there is another method of inspecting the file. You can also ask for inspecting the file. So if inspection of file is one thing that is to be arranged by the assessing officer, on an inspection, if you don't find any such approval on record, you can file an affidavit saying that I have inspected the record. I did not find any such approval in the record. So therefore, according to me, the notice was issued without approval. So it may be quashed. So if any, they will call for the record. If your affidavit is proved to be wrong, you will be punished. Otherwise, you will get relief.
The RTI is better, sir, because for affidavit, they may write it down later also and keep it inside.
Of course, that possibility is there.
Yes. So that
Only
is one
thing is, if there is a record that you have made an attempt, to get a copy of it, and you can demonstrate it before the appellate authorities, they would be normally pleased to call for the record to verify that issue. But if you have not made any effort before the assessing officer, you directly want the intervention of the appellate authority just to verify whether such approval is there or not. They won't interfere. We see many persons coming to the tribunal raising such issues that approval was not recorded or satisfaction note was not recorded. Then tribunal asks, how do you come to that conclusion? Have you asked for a copy? Then they will remain silent because they have not asked for a copy. So they are raising the ground for the sake of raising the ground. So that type of attitude even appellate authorities won't accept. So therefore, my point is, you make an attempt before the assessing officer, either by way of an RTA petition or by regular request letter and follow-up letters. If you fail also, tomorrow it will be handy for you when you go to an appeal. But if you fail in asking on the with the presumption that in any case they won't provide, you will be losing at all levels.
Yes, so that was many of the younger chartered accountants do not ask for reasons, and after asking for reasons also they do not object. So these are the steps which are missed at the initial stages. If they are done, it is beneficial for the essay at the later stage.
Yes.
So I members, any queries, sir? Okay, sir. Thank you.
Either they have completely understood or they have not understood anything. These are the two possibilities.
So they have understood, sir. But since these are being new provisions, obviously some confusion will prevail, will be there. Okay. So that might be one issue. So so if possible, some examples if you can add in the presentation. That will be very helpful, sir, for understanding the provisions better, in a better manner. If at all it is possible, some examples.
I will try.
Okay, thank you. So Vamsi, you can go ahead with the closure of this session. Proposed vote of thanks.
Sir, the PPT will be shared after the session, sir.
In the WhatsApp group, I will share. In the WhatsApp, Nellore CS WhatsApp group and the updates group, I will share. I have the PPT with me. Sir has mailed me yesterday itself, so I will share that.
Thank you, sir. That is a wonderful presentation from your end. All these provisions were very new, so I request all the members to go through the provisions once again, because most of the provisions which we discussed today are coming into effect from 1st April 2021. So I request the members to take some time and go through these provisions once again. And if you are having any doubts from your end, you can definitely write to the institute, or you can WhatsApp to me or our chairman Sujit Kumar Jain, so that they can be we would be able to get the answers from our faculty, and definitely it would be useful to you. With this, I take this opportunity to thank all the members who have participated in today's program, and more specifically, I would like to thank our GVN Harigaru for his wonderful presentation on today's topic. I hope most of the doubts which we are having were clarified. If you are having any further, as usual, I request them to write it down to the members. And I also like to thank our branch AO who supported throughout the session, and all the participants. Thank you very much. Thank you. Good night.
Thank you.